Hey traders, welcome back to another video. Today we're taking a look at gold, which sold off heavily. We'll also discuss what's going on in the stock market with the big sell-off, and I'm going to be going through all of my current positions. We see some pretty aggressive selling, and I am actually buying the dip on some stuff, so let's talk about it. Also, as we get started with today's video, I wanted to mention OANDA, who is my preferred brokerage for people in the US looking to trade FX. We've left a link down below in the description if that's something you're looking to do. I know a lot of traders in the US, they like to trade FX, but their options are limited. OANDA has some great perks and features that are available to US traders, so if you're interested in checking them out, that's what I personally recommend. The link will be down below in the description. First up, let's talk about gold. So many of you guys have been following me and may have watched my gold trade play out, which ended up being one of my better trades this year. In fact, gold really made a really impressive move off of these lows, and although I've tried several times, I had a couple stop outs and false starts, this trade ended up paying for all of that and more. We had a really nice move higher, and I was able to trail my stop up to this point. Basically, price reversed, took profits on that move, and I've actually chosen to re-enter my position with a much smaller size this time. Why a smaller size, and why am I back into the trade? Well, this morning after the sell-off really picked up, I looked again at my gold theory and I said, is it time to kind of jump back in right away? And I realized, you know what, I'm still very bullish on gold. The fundamental factors for me, for the most part, really haven't changed. We still see inflation cooling. We see labor data cooling off as well, not necessarily crashing, but slowing a bit. So you put these factors together and you are left with, okay, it still looks like rate cuts are expected out of the US as well as many other central banks around the world. So the theme is rate cuts. Central banks around the world also have been buying gold aggressively, selling off their dollars. So there's not only that, but there's also geopolitics around every corner. You've got the elections here in the United States, as you know, we just had an attempt on the previous president's life, and now people are trying to figure out who's going to be the next president, whether it's going to be Biden or Trump. There's uncertainty there. There's uncertainty with the Taiwan situation based off of Trump's comments, which we mentioned yesterday. Maybe we can just play a real quick clip from what Trump said in case you missed it.
I thought it was a remarkable moment in the interview. We ended up asking, a lot of economic questions about sanctions against Russia, and we asked about Taiwan sort of as a throwaway question. And he basically came out and said, what has Taiwan done for us? We have been Taiwan's insurance policy for years. They stole our chips business. I'm just not sure it makes sense for us to, keep defending them when China wants them so badly. It was a really remarkable moment.
So the point is, there's geopolitics and concerns everywhere that could cause gold to have further spikes to the upside. So I really still like the story for gold. So I've chosen to re-enter my position with a much smaller sizing. Now let's get on to that. Why did I choose a smaller sizing to enter gold? Well, my risk per trade is not uniform. I've talked about this before. I don't risk a straight 1% per trade or anything like that. I risk based on the level, how much I like the trade, how much I like the technical fundamental setup, etc. And so when we look at gold, we are still getting a bullish reading on the Edge Finder, but it's not getting a screaming, very bullish reading like it once was. And we've also seen price make a push higher. I'm still bullish. I think the momentum continues to the upside overall this year, but in case I'm wrong, I want to have a smaller risk on this trade. So my risk is smaller, my entry, however, I still believe fundamentally we have more upside to go this year. We've seen a really dominant year for gold to the upside, and I do think that that is set to continue as of some of the factors that I just recently mentioned. So I'm back long gold, stop below this level. If I get stopped out on this one, it is really not a big deal because I've, captured a huge, overall theme on gold. I've been more right than I have wrong. But that being said, if I am wrong, I will stop out below this level of support here when looking at the daily and 4-hour chart levels. Now this morning, I also picked up a position on the Nasdaq, and this is my second attempt. Yesterday, I got absolutely clotheslined by the Nasdaq. I tried to go long. I was too early, got stopped out. And this is my second attempt. So first attempt was right here. Second attempt is today at current levels at the time of recording this video. And I do want to just mention something that I do in my videos that I hope that you guys recognize and appreciate. I show you guys my trades before they are making ginormous moves one way or the other. A lot of times, social media sort of traders will really tout what they've done that has been correct, but they won't tell you exactly when they're taking a trade or what they're going to do in their positions ahead of time. I try to do that because I find that incredibly frustrating, and anybody is a genius in their hindsight account. Man, if you guys saw my hindsight trading account, it's worth trillions of dollars because I never take losses when I know what's going to happen after. Anyways, a lot of times you'll see that as a theme in the social media trading world. I find that to be really not constructive. I am putting myself out there with my videos. I hope you do appreciate that. And if you do, hit the thumbs up button, and I appreciate it from you as well. So again, if I see the Nasdaq continue to trade lower, then again, this would just be the second attempt that did not work out well, which would be fine. I think that, one thing that I talk about frequently is my entries. I often try more than once to get the right entry. Obviously, yesterday my entry was a bad one. Today, we'll see if this one works a little better. And if it doesn't, I'm not risking the whole account on this. I'm risking really small. So if I'm wrong and I get a better pricing to maybe try a third time, I actually like that even better. So, I'm open to this market continuing to sell off. I feel like I'm getting a better pricing, and the rebound trade could be stronger in that case. But we'll see. I might be right on this one. I might be wrong. I generally like the upward trend that we're seeing on the Nasdaq, and we'll see if it can hold this level. The Nasdaq's also getting a bullish reading on the Edge Finder. You can see here another +5 reading. And later today, we'll be getting the commitment of traders data, which will be very, very interesting to see if institutional money has been buying or selling the Nasdaq in their latest filing. We'll keep tabs on that. And for those of you guys who watch the Sunday videos, I will likely talk about the commitment of traders data there. But if you'd like to get access to this tool for yourself, there is a link down below in the description where you can sign up for a 30-day trial. You apply for a trial, and we'll send you some information about how you can get set up with one. So all of that can be found in the description of the video. The dollar index also has made a big push underneath support here recently, but traded back up in the last 2 days. So some resiliency from dollar bulls. I do think this is very normal, even for this dollar bearish trend to continue. This shouldn't be too surprising that we're seeing a little bit of a bounce on the dollar index. I am still bearish overall, and even if we see a move back up to 105, I think that that's very healthy and very normal for a downward trend. You're usually not going to see straight moves forever in one direction. You usually are going to see, if the dollar bearish story is going to play out, you still want to see corrections. That's just healthy in any sort of up or downward trend. Speaking of currencies, the euro tried to make a break out of this 109 level, and unfortunately did not have any follow through there, coming back down here today. The pound USD is pulling back. I'm interested in possible longs on this one if we can get it. Dollar yen broke lower, is now retesting this 158 level, and my dollar Swiss trade is still doing all right, hanging in there. Has bounced off of support around the 88.40 level. I am still in this trade and would love to actually see a lower high in this one form. If it does happen, then I can go ahead and actually trail stops further into profit on this one. But if we see a full-on rip higher on the dollar Swiss, I will walk away with a really small profit, but that would be fine. It happens. It wouldn't be the first time, and certainly won't be the last either. I did also get stopped out on AUD USD. This was a trade that did not perform very well. The entry was beautiful at first. You can see we moved up higher, then we came right down to that level and held it again. I figured, wow, this must be a decent entry. And then the price dropped as the dollar index got strong. So I'm out of this one and no longer actually interested in taking a trade on the Australian dollar, simply because if you take a look here, the Edge Finder is not giving us that bullish reading anymore. So to me, that just signals, okay, I'm going to stay on the sidelines and keep an eye on it. I also picked up some more technology specific ETFs today, which maybe I'll talk about in a future video. I'm a little short on time today when I'm recording this. I got to jump on a podcast, but I wanted to discuss just generally for a moment the theme that I'm kind of leaning towards, which is I am still preferential to tech stocks over other companies. I know there's a lot of push recently for, buying the Russell and buying the Dow Jones and buying the S&P 500 and broadening out. But for me personally, I am still primarily interested in being long the Nasdaq as well as other tech specific areas of the market. The reason for this is that tech got us here. Tech rallied this market so hard, the AI revolution, the AI trade. If this market is going to stay bullish overall, I think it's going to be led by the tech sector. So I do like predominantly the technology space, and that is, for better or for worse. I could be wrong about that. I could be right about that. But at the end of the day, that's what makes a market. There are smart people on both sides of the theory or trade, trade, but we'll see what the market ultimately decides to do with tech. We saw today a big thing was the CrowdStrike caused or supposed caused outage for many technology things. Maybe Chandler, you could find an article on this, but there was a huge outage today, one of the biggest in recent modern history, that caused complications all over the world with like cybersecurity stuff. And that's part of the reason why we're seeing some sell-off in specifically companies like CrowdStrike. So if we go take a look at CrowdStrike, which is down big today, you can see a big drop off of that news. We'll see if that stays the case or if we do see dip buyers. Personally, I lean more on the dip buying opportunity with something like CrowdStrike. So that's an area of the market that I'm kind of bullish on. So we'll see if that ends up being the right call or not. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.